Hey, what's going on, guys? Thank you for watching my YouTube video, and please like and subscribe if you've been liking the videos and making a lot of dough. So today I want to talk about the ultimate support and resistance trading strategy. Now this is an advanced concept, and so we'll talk a bit about the basics, what support and resistance are, and then we'll go along. So support level refers to the price level below which historically a stock has difficulty falling. What it really means is that a support level is where buyers are willing to buy it, and if there's a resistance level, is a level where sellers are willing to sell. So that's support and resistance. Some of the few myths about support or resistance is, of course, the myth is the more time support is tested, the stronger it becomes. That's what people think. Just think about it. If there's a wall, if you keep on hitting it, is it gonna become stronger or is it gonna be weaker? The myth is it is gonna become stronger, but actually it becomes weaker. Another myth is that support and resistance lines they're just lines on your chart. Is it really a line or not? We are going to break it down and see what's going on. And the other myth is you should place your stop loss right at support and resistance. Now, is that good or not? We'll take a look at it and break it down for you. So let's continue. The truth number one is the more times support or resistance is tested, the weaker it becomes. Why is that? Like I mentioned, the market usually reverses a support because there's a buying pressure, right? There's a lot of people at a particular support level willing to buy it. However, over time, if it keeps on hitting at the support level, there's only so much money left to actually buy it, right? So the buying pressure in terms of supporting a particular stock, a particular investment, could be from a bank, smart money traders, and I mean, there's only so much money that they have to actually buy it. I mean, eventually, when there is no more money to be put on the table or no more risk on the table, chances are what's going to happen? The support is going to break. Same thing with resistance. There's only so many stocks or investments that somebody has to sell. I mean, once they run out of the amount that they want to sell, you know what? The resistance is going to break through. Here's what it really means. Multiple times it gets tested over here, and I mean, the first time a few times get tested and actually have a run, and as I mentioned, there's only so many buyers in there, right? And once it actually breaks through, you know what? There's a trend change right there. Now take a look at over here. At this resistance level of $145, I mean, it goes and hits it a couple of times, right? And once it actually goes through and see there's a nice $10 run, it just releases the pressure. So think of it as a pressure cooker, right? There's a pressure on it, pressure on it, pressure on it. But once that pressure is released, this actually makes a run over here. Let's take a look at it again. Around this $150 level, every time it comes, you see that you get big flushes down. But once it goes through, and boom, you get $20 run. One of the pro tips that we really want to take a look at is in terms of support and resistance is if there's a higher low into resistance, you will usually result in a breakout, right? What I really mean is this. So a couple of times just trying to find a higher low over here, but actually didn't really go, so it broke down. This one, it didn't really find a higher low, but this one, look at it. It tried to make one more move, a higher low. Once it broke through, it's an easy way out, right? Let me show you over here. Once it came up, came through, had a higher low right here, and then it actually broke out, right? So that's where the pro tip comes into play, is that the higher lows into resistance will usually result in a breakout. On the flip side, the lower highs into support is usually going to be a breakdown, right? The truth number two. Support and resistance are areas on a chart. They are not exact lines or exact price, right? Let me explain. This $900 region right here, it's a region of support. It doesn't mean that it's one particular price. It's a region they're willing to buy. $950 is once again a region that they're willing to buy, right? Once it comes back to $1,000 level, it's a region that they're willing to buy. In terms of resistance level, the $1,000 is not exactly $1,000 as a resistance. I mean, it try to come through it a multiple of times, right? It's not an exact dollar amount, so it's not an exact line. Once again, if you look at the Google chart on here, if you look at this region of buying is between $940 and $960. It's not like one particular price they're willing to buy. So multiple prices they're willing to buy and they're willing to go. In terms of resistance, again, this $1,000 level is not exact $1,000. It's a couple of times it goes through and comes back, right? Truth number 3 is that support and resistance can be dynamic, right? What I really mean is that there could be a region of support and resistance. If you look through the ultimate moving average indicator, the strategy, you will notice that moving averages are really dynamic support and resistance. What I really mean is, look at this. When the stock actually goes through, now it seems like this is acting like a support, right? Same thing over here. When it goes up, comes down, it acts like a support, and actually goes back up, right? In terms of when it goes down, it goes back over here. There's a lot of resistance level. There's a dynamic resistance level. So when it comes through this level, you get a nice flush down, right? Once again, in terms of this 10-day moving average, if you see multiple times it comes through, it acts as a support and keeps on bouncing through, right? And once it becomes resistance, I mean, just try to be a resistance as well. One of the ways you can really do a pro tip is treat support and resistance as areas on your chart and not lines, right? This applies to both the horizontal and the dynamic support resistance lines, which means it's not a particular space or a particular price, it's a region of price that people are willing to buy. Truth number 4, support and resistance are the worst place to put your stop loss, right? Think about it. If you don't really need to be a Albert Einstein to really know where the whole stop losses are. I mean, if this is a resistance level, right? Once it comes to this resistance level, you put a short position over here and try to put a stop loss over here. I mean, boom, you get knocked out, right? And then after it stops you out in a short position, and then it actually goes through. Let me go through again. Once again, this is the resistance level. Once it goes through resistance level, and then it comes back up. So if you're trying to short it on these positions, I mean, this gigantic bullish candle is going to kill you through, and then actually it's going to make us move. So in terms of how you're going to avoid it, well, you can't really avoid it entirely, but there is 2 things that you can really do. You can set your stop loss at a distance from the support resistance levels, and you actually wait for the candle to close beyond, right? Now, if you wait for the candle to close beyond the support resistance level, then you would be able to protect your position, whether it's a long or a short. And you'll only exit if you trade if the prices closes below the low of the support or the high of the resistance. Let me explain. So think about this as a resistance level, right? It's pretty clear on here. If you go and take a short position over here, chances are you're going to get smoked out right here. If you waited for this to actually close to form this doji candle, and the next one and you take a short, so you can put a short position over here, the stop over here, and then you get this flush down, right? So that's what it is. Now, in terms of trading a support or resistance, it gives you a favorable risk to reward. So let's say, what it really means is that, let's say if you were to enter just right here blindly, right? The resistance level is over here, and the support level is over here. If you take a short position right here, you gotta put a legit stop loss right here, right? So in terms of the risk and reward, you'll see that it's actually 1-to-1. I mean, you're not really gonna make a lot of money. If you do it multiple times, you'll actually lose a lot of money. As compared to the other flip side, if you wait for the stock to actually come to your entry levels, right? This is the region of resistance. You wait for it to come through, and then once you see a confirmation over here, you put a stop loss right up here and wait for it to come back, right? So you get a small amount of risk with a lot of reward. One of the pro tips I want to give you is, of course, you want to go and mark your support and resistance levels in advance, and then look for trading opportunities when the price comes to your level. If the price is anywhere else, if it's not on the support or resistance, stay out, right? It's going to increase your probability of profitability. Now, how to tell when support or resistance will break so you don't get trapped, right? The support tends to break in a downtrend, and the resistance tends to break in an uptrend. Support and resistance tend to break when there's a buildup. Let me explain. So in these ones, you can see there's a multiple ways you can take a look at it, right? One of the easiest ways is to build up a support before the breakdown happens. I mean, you see a lot of testing of the support levels, which actually breaks through. Same thing if you look on this side. If you look at this, it can move down, multiple levels of support being tested, and then you get this flush. Right. Same thing over here, just $140 level, multiple, and then you get a big move up. On this Facebook stock, again, this $155 level, you get a multiple push up here, and then it has a push up. Now, a support and resistance trading strategy that lets you profit from losing traders. What do you mean? Here's a fact. If there's a support and resistance level, it is going to attract a lot of attention from traders, right? There will be some looking to trade the reversal, and some are going to looking to trade the breakout. I mean, there's really a buyer and seller at all point of time, but during those regions, there is a higher probability of people are going to notice. Now, since trading is a zero-sum game, for reversal traders to profit, the breakout traders have to lose. And if you're trading for a breakout, the only way for you to profit is the reversal traders have to lose, right? Now, I want to share with you in terms of a support and resistance trading strategy to profit from breakout traders, right? So first of all, a couple of things, 5 things you really need to do is mark your areas of support and resistance. Take a look at a chart, find out where your support is, where your resistance is, and then you wait for a move into those regions. Once you see this movement into those regions, wait for a price rejection in terms of a confirmation of a candle, right? Once you see a price rejection, a price confirmation, let me say, you can enter the next candle when it actually comes, and you put a stop loss beyond the swing high or low. And last but not the least, you want to take profits at this next swing high or low. Let me break it down to you what exactly it means. So in terms of support and resistance levels, you will see once you draw your resistance levels, right? So resistance we talked about is not a particular price, but it's a particular region. So once we anticipate this is the region that we want to trade, and this is the region we want to play as support. So we wait and wait and wait, right? Once the particular investment or stock comes into the region, that's where you want to try to find a confirmation, right? You see a directional movement to the resistance level. Now you want to see some kind of a confirmation to make sure that, you know what, if it were to reverse, I want to see a confirmation candle, some kind of a reversal candle. We discussed about reversal candles in the ultimate candlestick strategy. Go through my YouTube videos, you will find more about it. But yeah, we want to wait for a price confirmation. Once it comes to this, you see a price rejection, right? So step 1, we wait for the trade to move into these zones. Once it comes to a zone, we want to see in terms of price rejection to happen. Once a price rejection happens, now at this low of these candles, we want to initiate a position with a short right here and put a stop right here. Right. And then when it starts moving in your direction, you want to start trailing. And of course, as you mentioned, in terms of once you take a short position over here, you want to start trailing at your profits at these swing lows. Easy enough? Let's take a look at it. Now, in terms of successful false breakout, right? So we talked about now we're going to talk about a trap. Trap is a support level getting tested multiple times and it actually reaches through it, right? And once it actually comes over that level, you know what? This is actually looks like a bear trap, right? Everybody would have just thrown everything on here, hoping that, you know what, this got tested multiple times. Now I want to go short, and boom, you got smoked out. One thing again, people try to keep on shorting it, hoping that there's a trend out here, but then boom, once they go through this level, it reverses back up and starts going up. So what I'd like to conclude is, of course, the more times the support or resistance is tested, the weaker it gonna becomes. Think of it like a wall. Keep on hitting it, eventually it's gonna break. Support and resistance are areas on your chart. They are not a particular line, they are a region of interest. Support and resistance can be identified using moving averages, so it doesn't have to be a specific region with a horizontal lines. It can also be a dynamic moving averages, whether it's a 10-day moving average, a 20-day, 200 or 50-day moving average. Depending on what kind of particular market you're looking at, you want to look at those moving averages. And do not place a stop loss just below the support or above resistance, right? Wait for the price to move into your support or resistance levels, wait for a price confirmation with the formation of a candle, and then you initiate a position right after the candle is formed. And of course, if you trade at the support and resistance levels, it gives you a favorable risk to reward. If you take random entries, you will find random results. If you take specific entries, you will get specific results. And a support or resistance is actually a trading strategy. It's not just there for it to be. So once again, guys, hope you liked the video. If you like it, please like and subscribe, and give me a follow on Twitter at watchliststock, or if you have any questions, send me an email, swatchlist@gmail.com. Have a good one.